You've probably heard of Warren Buffett, the American businessman known for world-class investment strategies. With a staggering net worth of $116 billion, he stands as one of the most exceptional investors of all time. Over the years, Buffett has been very vocal about his opinions on inflation, sharing valuable insights and strategies to navigate its impact successfully. In this video, we will explore the most vital of these strategies. Stay tuned until the end. Inflation is currently one of the more discussed topics in finance, and as we approach another recession, the impact of inflation is being felt profoundly, not just in the American economy, but also across Europe and various other parts of the world. If you want a way to achieve financial stability without resorting to drastic measures or accumulating overwhelming debt, then you've come to the right place. Warren Buffett has incredible advice and strategies on how to not only weather the storm of inflation, but also prosper in such challenging economic conditions. By following his advice, you can pave your way towards a financially secure future that remains unaffected by inflation. Buffett's battle against inflation has been a constant theme throughout his career. He has often cautioned investors about its destructive impact and shares invaluable insights on not only shielding ourselves from its effects, but also capitalizing on it. His wisdom stems from personal experience, having navigated inflation's challenges in his own investing journey. And now, he's determined to prevent others from repeating his past mistakes. As the CEO of Berkshire Hathaway, Buffett has provided a comprehensive account of how inflation can internally affect us. It operates on an inverse relationship with purchasing power. As prices rise, our purchasing power diminishes accordingly. Buffett emphasizes that inflation is becoming increasingly prevalent and unpredictable, with prices soaring and people reluctantly accepting the situation. Even the 5% interest typical of bonds is insufficient to support us in the long run, as it erodes rapidly when faced with 6% or more inflation. By following the following 7 steps advised by Buffett, you can learn how to thrive and prosper even amidst inflationary challenges. Step number 1. When venturing into investments, choose companies wisely. There are several crucial factors to consider when selecting a company to work with, but the most vital aspect should be their flexible pricing power. Take renowned companies like Apple or Coca-Cola, for instance. Their loyal customer bases enable them to increase prices without losing business, as people remain interested in their products, which outperform competitors. Such companies show their ability to withstand inflationary pressures by managing their costs effectively. On the other hand, some companies leverage inflation to raise prices and boost profits. Examples include Kroger, CVS Health, and TJ Maxx's parent company, TJX, which made substantial profits during the COVID-19 period when other businesses were struggling. These companies understand how and when to implement price adjustments in line with public expectations. Step number 2. Compare your investment returns to inflation. The key aspect of investing is evaluating the returns you're receiving. Your investments continue to work for you relentlessly, even when you're not actively involved, be it your day job or a side hustle. However, investors need to calculate the actual returns they are generating. While a 10% return may seem good at first, it can still leave you susceptible to the impact of inflation, especially if the inflation rate rises to 7 or 8%. In such a scenario, your net returns could dwindle to just 2 or 3%, which isn't substantial. Even if you opt for safer choices like interest rate bonds, recent inflation reports indicate they may not be entirely secure. With interest rate bonds, you might end up with an annual return of around negative 2.2%, which is far from ideal. Remember, even if you're generating modest profits, it's better than having nothing or worse, losing money. Step number 3. Recognize your strength and skills. Recognizing your strengths and skills is a fundamental aspect of personal growth and career success. It involves a lot of introspection and acknowledging your abilities, which can serve as a foundation for further development. Acquiring new skills should be perceived as an investment in your future, regardless of your current stage in life. The continuous pursuit of knowledge ensures adaptability in a rapidly changing world and can lead to new opportunities. To maximize the impact of skill development, focus on in-demand skills that align with your natural strengths and passions. Starting with areas that resonate with you will foster motivation and commitment, increasing the likelihood of excelling in those fields. By channeling your talents and skills into areas of high demand, you can enhance your market value and remain relevant, even during times of economic inflation. This strategic approach safeguards your abilities from potential devaluation and empowers you to navigate uncertainties with confidence. Step number 4. Identify and sell underperforming assets. One common asset that many investors possess is gold, which many consider an incredibly valuable asset during inflation. Buffett's stance challenges the notion of gold as a productive and growth-oriented investment. While it may be useful during inflation, its limited ability to generate income and returns over time contrasts with assets like stocks or real estate. Emphasizing a diversified investment approach that includes a mix of productive assets can provide a more well-rounded strategy for long-term financial security and prosperity, especially in a dynamic and unpredictable economic landscape. Step number 5. Seek businesses with low capital requirements. One of the most significant challenges faced by entrepreneurs is the high cost of starting a business. However, with smart decision-making, you can turn your dreams into reality without excessive financial burden. It's not always about working harder. Working smarter can lead you to success. Look for business opportunities that don't demand substantial startup costs and instead allow your skills to shine. Some low-cost business ideas include creating and selling digital courses, leveraging your expertise to offer content creation services, developing software-based solutions, and venturing into event planning. These businesses require comparatively minimal investment and hold great potential for success. In today's digital age, there are numerous opportunities for low-cost ventures that hold great potential for success. For instance, you can create and sell digital courses in areas where you have expertise, tapping into the growing demand for online education. Alternatively, you can leverage your skills and knowledge to offer content creation services, catering to businesses and individuals in need of high-quality content for their websites, social media platforms, or marketing materials. Developing software-based solutions is another viable option, where you can capitalize on your programming or tech skills to create software products or apps that cater to specific market needs. Step number 6. Opt for assets that can beat inflation. After debunking the usefulness of precious metals, as suggested by Warren Buffett, the question arises, where should you invest to combat inflation? Warren Buffett's favorite assets are stocks, and he provides invaluable guidelines for profiting from them. Never underestimate the significance of each share. Treat buying stocks like acquiring an entire shop, meticulously assessing its sales capacity and competitive power. Exercise patience when selecting stocks, carefully analyzing and observing before making a move. Avoid purchasing stocks simply because they are currently in the limelight. Instead, follow Buffett's advice to be cautious when others are overly optimistic, and to be bold when others are fearful. Invest in stocks with the intention of holding them for the long term, ideally around 10 years, as it allows you to understand the company's true nature and potential. By following these golden guidelines, you can navigate the stock market with more confidence and increase your chances of success. Step number 7. Strive for excellence by offering exceptional services. Having explored various investment avenues, it's now time to invest in yourself. This applies to professionals from all fields, whether you're an engineer, teacher, baker, office worker, startup owner, or a doctor. To combat inflation successfully, the key lies in enhancing your skills continually. Investing in yourself can mean a lot of different things, such as pursuing further education, attending workshops and training programs, seeking mentorship, or gaining hands-on experience in new areas. By staying current with industry trends, emerging technologies, and practices, you can remain relevant and valuable in your field. Furthermore, developing a growth mindset and embracing a lifelong approach to learning will not only help you adapt to economic challenges, but also open doors to new opportunities and career advancements. In summary, while traditional investments are essential, recognizing yourself as a valuable asset and continuously investing in your skills and abilities is a great way to overcome inflation and secure your financial future. Consider this. The cost of your education might have been paid in older dollars, but to thrive in the current economic climate, you must deliver your services at present-day value. In a competitive landscape influenced by inflation, staying updated and acquiring new skills is essential. Embrace continuous learning, enroll in relevant courses, familiarize yourself with cutting-edge technologies, and broaden your expertise. By doing so, you can position yourself as an indispensable asset to your industry, making it difficult for anyone to replace you. These invaluable guidelines from Warren Buffett not only aid in combating inflation, but have the potential to transform our entire lives positively. In times of uncertainty about the direction and intensity of inflation, it's best to prepare for all possible outcomes.